Europe's worst energy nightmare is becoming reality. Inflation across the European Union will remain extraordinarily high for the remainder of the year, keeping households and companies under long-term financial strain. Insane, isn't it? The economic situation has turned for the worst as rising inflation and energy crisis, riots in the streets, and violent war have turned one stable continent into a teetering mess on the brink of collapse. Well, in today's video, we will be looking into some disputed matters regarding the European Union and the wild situation that may push many of its members to the brink. Without much ado, let us begin. Did you know that the latest economic forecast released by the European Commission offers a pessimistic outlook of the times that lie ahead? Prices in the Eurozone will climb an average of 7.6% in 2022, while the whole EU will see a stronger surge of 8.3%. A total of 9 EU member states, Estonia, Latvia, Lithuania, Slovakia, Bulgaria, the Czech Republic, Hungary, Poland, and Romania, are predicted to end this year under double-digit inflation records, with the Baltic countries being the worst hit. At the same time, the European Commission has revised downward its growth estimates. The Eurozone is now estimated to expand at a 2.6% pace in 2022 and a timid 1.4% in 2023. The update almost halves the 4% growth rate for 2022 that was forecast back in the winter, before Russia launched the full-scale invasion of Ukraine and rattled the global economy. Germany, the bloc's industrial powerhouse, will expand by just 1.4% this year, while France will experience a 2.4% evolution. Italy will grow at 2.9% in 2022, but will fall to 0.9% in 2023, the lowest figure in the Eurozone. As Russian gas cutoffs upend European energy security, the continent is struggling to cope with what experts say is one of its worst-ever energy crises. And it could still get much worse. For months, European leaders have been haunted by the prospect of losing Russia's natural gas supply, which accounts for some 40% of European imports and has been a crucial energy lifeline for the continent. That nightmare is now becoming a painful reality as Moscow slashes its flows in retaliation for Europe's support for Ukraine, dramatically increasing energy prices and forcing many countries to resort to emergency plans. And as backup energy suppliers such as Norway and North Africa are failing to step up. Let's hear it from Alex Munton, an expert on global gas markets at Rapid and Energy Group, a consultancy. He says, "This is the most extreme energy crisis that has ever occurred in Europe. Europe is looking at the very real prospect of not having sufficient gas when it's most needed, which is during the coldest part of the year." Prices have shot through the roof, added Munton, who noted that European natural gas prices, nearly $50 per MMBtu, have eclipsed US price rises by nearly tenfold. That is an extraordinarily high price to be paying for natural gas, and really there is no immediate way out from here. What's causing these inflation rates? Europe and much of the wider world were already being hit with soaring energy prices, which contribute to inflation. Before Russia's invasion of Ukraine in late February, the conflict has exacerbated the energy crisis by fueling global worries it may lead to an interruption of oil or natural gas supplies from Russia. Russia has lately been the EU's top supplier of oil, natural gas, and coal, accounting for around a quarter of its energy. The war in Ukraine again dramatically worsened the outlook, as Russia and Ukraine account for nearly a third of global wheat and barley, and 2/3 of the world's exports of sunflower oil used for cooking. Ukraine is also the world's 4th biggest exporter of corn. Many officials and energy experts worry that the crisis will only deepen after Nord Stream 1, the largest gas pipeline from Russia to Europe, is taken down for scheduled maintenance this week. Although the pipeline is supposed to be under repair for only 10 days, the Kremlin's history of energy blackmail and weaponization had stoked fears that Moscow won't turn it back on, leaving heavily reliant European countries in the lurch. As a piece of information, Russia's second pipeline to Germany, Nord Stream 2, was killed in February as Russian President Vladimir Putin prepared to invade Ukraine, leaving Nord Stream one as the biggest direct gas link between Russia and Europe's biggest economy. Across Europe, Signs of distress are multiplying as Russia's war in Ukraine drags on. Food banks in Italy are feeding more people. German officials are turning down the air conditioning as they prepare plans to ration natural gas and restart coal plants. Now the big question on everyone's mind is obvious. Will it be turned back on, or will Putin execute a squeeze on the European energy sector? A move that threatens to completely collapse the European economy. That's not an exaggeration. One of Germany's top union leaders was quoted saying that because of the gas bottlenecks, entire industries are in danger of permanently collapsing, which includes aluminum, glass, and chemicals. It's hard to do business and compete with the rest of the world when you're paying up to 10 times more than everyone else for basic input costs. Even without the closure of the pipeline, the Germans are already facing the consequences because of the reduction in flows. The German frontier power price level has jumped to 343 euros, a price that has never before been seen in history and 6 times more than what Germans were paying historically. Javier Baez, an energy columnist at Bloomberg, took to Twitter to say that at these levels, German manufacturing would simply crumble. If Russia's prolonged disruptions continue, experts warn of a difficult winter, one of potential rationing, industrial shutdowns, and even massive economic dislocation. British officials, who just a few months ago warned of soaring power bills for consumers, are now warning of even worse. Europe could face a winter of discontent, said Helen McCroft, a managing director at RBC Capital Markets. Rationing, industrial shut-ins, all of that is looming. Europe's most pressing challenge is the shorter term. Battle record inflation of 8.6% and get through the winter without crippling energy shortages. The continent relies on Russian natural gas, and higher energy prices are flowing through to factories, food costs, and fuel tanks. Uncertainty weighs on energy-intensive industries like steel and agriculture, which could face natural gas rationing to protect homes if the crisis worsens. French President Emmanuel Macron says the government aims to conserve energy by switching off public lights at night and taking other steps. Similarly, German officials are begging people and businesses to save energy and ordering lower heat and air conditioning settings in public buildings. It follows Russia cutting off or reducing natural gas to a dozen European countries. Germany's biggest importer of Russian gas, Uniper, has asked for government help after it was squeezed between skyrocketing gas prices and what it was allowed to charge customers. Karsten Brzezinski, the chief Eurozone economist at AIM Bank, foresees a recession at the end of the year as high prices sap purchasing power. Europe's longer-term economic growth will depend on whether governments tackle the massive investments needed for the transition to an economy based on renewable energy. Without investment, without structural change, the only thing left is to hope that everything will work as before. But it won't, Brzezinski said. While Europe is suffering, Russia has stabilized its ruble exchange rate, stock market, and inflation through extensive government intervention. Russian oil is finding more buyers in Asia, albeit at discounted prices, as Western customers back off. Now let's examine the inflation rise in some EU countries. In the July reporting, Germany saw its inflation rise to 8.5% after a small decrease last month. France's inflation now stands at 6.8% and Italy's at 8.4%. Baltic countries remain especially affected, with Estonia experiencing inflation of 22.7%, Lithuania at 20.8%, and Latvia at 21%. And annual inflation across the Eurozone is highly likely to peak at 7.6% in 2022. As the situation continues to worsen, we are seeing more and more violent protests break out in Italy and Netherlands. Taxi drivers started a massive strike, which ended with an attempt to break into parliament in the Netherlands. Police officers fired shots at Dutch farmers who were enacting a nationwide blockade, blocking off roads surrounding distribution centers and causing mayhem throughout the supply chain supermarket. Shelves saw rapid depletion as the situation continued to worsen the next day. Italian farmers were following in the footsteps of the Dutch, but besides the war and other rapidly increasing geopolitical risks on its borders, there is another major problem brewing. The farmers took to the streets of Warsaw shouting, "Enough is enough! We won't let ourselves be robbed." and we workers cannot pay for the crisis created by politicians. In Spain, farmers blocked highways in the southern region of Andalusia to protest against high fuel prices and the rising costs of essential products, as per the Scottish farmer. In Milan, Italian farmers in a convoy of tractors blocked city traffic, as per Morning Star Online. Farmers say they have lost around 3 billion euros as a result of the emergency and are being hit hard by rising fuel prices, with costs rocketing as a result of the conflict in Ukraine. Faced with growing protests, the EU will have to balance its food security with a green environment. Or else not only the repercussions of this agitation will hit the global food chain and drive inflation further in affected countries. Unrest has already been brewing, with strikes erupting across the continent as households struggle under the pressures of spiraling costs of living and inflationary pressures. Some of this discontent has also had knock-on effects on the energy market. In Norway, the European Union's biggest supplier of natural gas after Russia, mass strikes in the oil and gas industries last week forced companies to shutter production, sending further shockwaves throughout Europe. The next couple of months will be extremely important for Europe, and finding a way to manage the energy problems it is set to face during this year's winter will be the ultimate test. We'd love to hear, especially from the Europeans, what do you all think it is going to be like? Drop in the comments below. See you at the next one.